Happy VA Wednesday. Today we're going to be talking about, can I buy a manufactured home with a VA loan? Now, before I start, if you like this channel, hit like. If you have a friend that needs to know about VA loans, please share it. And if you haven't subscribed, subscribe. Okay, there's a lot of misunderstandings about this, and I don't really know why, to be honest. So let's talk about it. So can you buy a manufactured home with a VA loan? Yes. However, you guys know I was going to say that. It's got to be on a permanent foundation. It's that simple. So a lot of times people go, well, I want to buy land and I want to buy a manufactured home. Okay, there is a VA construction loan. We don't do it. Okay, what we can do is if you guys find a manufactured house, it's on a permanent foundation and it's already on land, then we can do it. Now, what are some things to watch out for? Realistically, I would say the manufactured home has to be 1977 or younger. Okay, so by younger, I mean like 2010, 2012, 2020, whatever, right? So really, would I say 1950? No, we can't finance it. 1920? No. 1960? No. 1970? No. 1978? Yes. Okay, so really important that you know the age of that manufactured. Now, if you go, well, Jen, it's not on a permanent foundation, can I still do it with a VA loan? No. I mean, you can't do it with a conventional loan either, guys. They need to be on a permanent foundation. Now, sorry, allergies are out of control. Where I really get concerned and what you need to watch out for is sometimes people have made structural adjustments to manufactured homes that make them unfinanceable. So if someone added a second level to a manufactured home, that's going to be really challenging to finance. You would need someone to say that it was structurally sound, which based on the basic physics of a manufactured home, it's not going to be, okay? So if it's that base manufactured home on that permanent foundation, cool. If it's a manufactured home where someone got all DIY, they added a second story, they added an addition, they added 4 decks, it gets really, really hairy, okay? So I can't say, like, I would stay away from anything where they've altered that original footprint, because those are the ones that are not financeable. Now, the next question I get is, okay, cool, great news. There's 2 manufactureds on the property. No, only one. Only one on a permanent foundation, only one. And if you go, well, Jen, there's one on a permanent foundation, the other one's not, it's a junker, is that a problem? Yeah, it can't be on the property, and we hit this with conventional loans too. Someone will be like, oh, the other issue is, well, there's a house, a stick-built house and a manufactured, it's a 2-unit. Yeah, nope, you can't have mixed properties, okay? So one manufactured only, permanent foundation, newer, and no one went DIY crazy. Okay, those are the keys to successfully financing a manufactured home. Now, the next thing that I always talk to buyers about is rate. The interest rate on manufactured homes is higher, whether it's VA, conventional, or FHA. If I consistently price them out, the interest rate is higher. So you need to know that going in, because a lot of times people will go towards a manufactured because they'll be like, well, it's more affordable. Not necessarily, because the interest rate will be higher. Now, the other thing to keep in mind is that if I fully underwrite you, I fully approve you for a stick-built house, meaning not a manufactured, and then you go to a manufactured, the approval's not the same. I know, that sounds crazy, I agree. But it's interesting because what I have found doing this for 427,000 years is that if we switch the property type in the system from detached to manufactured and run it through underwriting, it is more stringent. Okay, and I don't mean the human underwriter, I mean the actual desktop underwriting system. 580, 586, stick built, might I get it approved? Yes. Manufactured? Unlikely. Very unlikely. So it's really important that if you're only going to be looking at manufactureds, that you're talking to your lender about that up front. Like if you're working with me, just be like, tell my team, be like, guys, we're only looking at manufactureds, or I need to be qualified for a manufactured. I may find a stick built, but I want to do the worst case qualification, because then we're going to be doing it at the higher rate and with the more stringent desktop underwriting. Okay. And people are always like, well, I thought it was all interchangeable. It's not. And I bring this up to you guys because the last thing I ever want to do is fully underwrite you. You get into contract, then we find out it's a manu and I can't get it through the system and I can't get it approved. So really important that you guys understand there's a difference there. Now, the next thing, I know there's more. Isn't this exciting? It's in a manufactured park. No, nope, can't finance it. Those we cannot finance. Here's why. So if you're in a manufactured park, you also have what's known as space rent, and you don't actually own the land beneath the manufactured home. That's a no. That's a hard no. And last week with, is it last week with John Oliver? I don't know. Someone chime in. Last week with John Oliver, he did a whole thing on mobiles and manufactureds. It's really a good watch, because here's the thing. If you're getting a manufactured, a lot of times we'll see it in more rural areas, and it's your own land, cool. If you're buying a manufactured in a park with space rent that you don't control, best of luck, because the people who actually own the land, they can jack up that space rent as much as they want, and you're stuck because your house is there. So we can't finance it. Be really, really careful. If you guys have cash, or if your friend has cash, if you know someone about to buy in a park, make sure they understand those space rents can go up, because you do hear a lot of horror stories about that. So overall, can we finance manufactureds with a VA loan? Yeah. Do we do it all the time? Absolutely. We do it a lot in rural areas is where I see it the most, which means you're also going to be getting a septic inspection and a well inspection in most of the case, because these are more agricultural type properties. But yes, we can do it. Just make sure it's on a permanent foundation. There's not more than one. It's pretty new. And no one went DIY crazy on it. So questions, comments, as always, reach out. I am a mortgage lender in 48 states, and I am here to help you with your loan. I want to help you with your loan. So please call me. Don't work with an amateur because you're afraid to call. Thanks for watching, guys.